Now, do I hit the admit to any of them, Emily, or are you going to take care of all that?
No, I've got it.
Okay.
Okay, perfect. So it's 1 o'clock. I just want to welcome everyone to our Navigating Small Commercial Waters webinar featuring Romano and Declan here. I'm going to have them jump right into it, but if you have any questions, please feel free to put them in the chat and we'll get to it at the end of the session. Okay, Romano, take it away.
Thank you. Thanks, Emily. What, no theme music? I thought we'd have some like Rocky music or something to get us going. Okay, so I first wanted to welcome everybody and wanted to thank everybody for taking the time. We're looking at about 45 minutes-ish of your time, and I appreciate you joining us. Now, so I'm just going to read the tagline here. Are you a residential broker eager to venture into small commercial mortgages but unsure where to begin? Or are you an experienced commercial broker seeking to enhance your business and lending expertise? Well, we're going to try to talk to both of you and everybody in between. So hopefully we can answer some questions, give you a bit of insight into who we are, what we do, and we've got a special guest, and I'll get to Declan in a moment, but Declan, I've known Declan for a number of years, and I'm really excited to have him because he can give us, you're not going to just be hearing from me, you're going to be hearing from somebody that's experienced on the other side of the desk, who we are and what we're about. My name is Romano Tasciatti. Just a little bit about myself. Whenever I do these, I have to sort of remind myself how old I am. But I've been doing financial services for quite some time now. I ran my first cash as a teller back in 1984. So that's 40 years ago. I did that for a few years while I was in university, but I didn't really start taking banking seriously till about the late 90s. So since 1999, going back 25 years, I've either been either a broker or a BDM. BDM on the residential side, BDM on the commercial side. Broker primarily on the commercial side. So I've been in commercial exclusively for the last 17 years. Now, I joined Glass Lake a couple of years ago, and I joined as one of their regional sales managers, RSM, another word for BDM. But that role I'm no longer doing that. I'm going to be transitioning over to another role. Stay tuned for that as a commercial specialist. So I'll be more focused on commercial, which is my baby. This is why I joined Glass Lake. So a little bit about Glass Lake. Started coming together in early 22. Mike Forshee, Alex Godfrey, Ari put the company together. A bunch of us joined successive months. And when we started life, we were primarily a small balance commercial lender. And that's what we were going to go after, was the small balance commercial products with the eye to do residential somewhere down the road. We're looking for a launch date of late 22, early 23. And residential was, I remember being in the office saying, yeah, residential, we're going to do it later in 23. But when we started getting the increases in the prime rate, we found that we were getting a lot of feedback from brokers saying, we're having a hard time getting our residential deals done. And, because we're in the alternative private space. So before I continue with Glass Lake, just to explain, I always do this. So you've got the spectrum. On this side, you've got your Schedule A banks. These are the, CIBCs, BMOs, that sort of thing. And then on the extreme other side, you've got your privates, your mix, your, hard money. So the opposite extreme. Beside the Schedule A banks, you might have your equitables and home trusts and your credit unions, your alts. These guys are all regulated. So they're what we call B20 regulated. They got to follow rules. They're, I guess their master is OSFI, the Office of the Superintendent of Financial Institutions. They look after these guys. These guys aren't. They're not regulated at all. Well, we're right in between. We're right here between these guys and the alt mix. So we kind of play in this space. We've got their money. We've got as much money as some of these banks, but we don't have to play with these rules. So we're in a very unique situation. So that makes us very attractive on several levels, which we'll get to in a bit. So anyway, we did our first deal in January. Well, we started going out in January 2023, and we've been focused on res and commercial. Now, res has been very, very good to us. We've been very busy with our residential business, and commercial now we're focusing with me, I guess, with this new role and with other things that are coming down the line with Glass Lake, which stay tuned. I don't know if I can get into it now, but we are going to be doing a lot more with commercial, and that's where we are now. So we've been funding deals since I think last February. We probably did our first one, and every month is getting better. So I want to talk a little bit about commercial lending in general, and then, as you can see on the screen, we are your small commercial pros, and that's how we're positioning ourselves. Now, Glass Lake is funded by our parent company in the U.S. Now, our parent company, we have like a sister company, and it's called Silver Hill Funding. A lot of what Glass Lake is built like product-wise is a mirror of Silver Hill Funding. They've been doing it successfully for years, so we're kind of following what they've done with our Canadian twists. Obviously, we've got 1 and 2 year terms. They don't. They're basically 3 and 5, and they are more focused on the commercial side, even though they do some of the investment for the press side. But commercial lending, okay. So I've been doing commercial for, like I said, a good 17 years. Your traditional commercial lenders, the guys up here, the guys that are more regulated. When somebody thinks of commercial, they tend to get intimidated because they think, oh my God, what do I ask the client? I don't know anything about commercial and so on. When you're dealing with a lot of these guys, and Declan could probably verify this when going with him, you've got to prepare your package. You get a deal from a client, you've got to do your analysis, you've got to basically underwrite the file. You can't just send a deal to them and say, what do you think? I have something here. Can you help me? Because they're busy looking at files that were submitted by brokers that have prepared it. And they put the deal together and they just basically verify. They underwrite the deal and they go check, 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 check. We have a deal, and then they move on to fund it. Very few lenders will work with you and say, send me the minor details, and we'll take a look at it, and then I'll help you put the deal together. That's where we're different. Now, if you look at the slide that's up there, and I'll continue with some of the things that distinguish us, because it's very important. That sort of more traditional commercial lending intimidates a lot of brokers, intimidates a lot of people. For us, if you look at our product, I'm just going to go quickly through, we're ideal for somebody that's a seasoned investor, somebody that's got a portfolio of properties, or they're looking at their first one. Preferably, we want experience, but people that have properties they rent out. So when you look at the different asset classes, we're looking at multifamily, anything with 5 units and up, mixed use, which is a storefront on the bottom and residential up top, retail, which is like storefront, office, warehouse. That's your more traditional stuff. And then if you look at the bottom, it says, those are your standard and unique property types. The unique property types that we'll do, that a lot of people won't, are automotive, daycares, bars, restaurants. You go to these guys here, regulated guys, they won't touch any of that stuff. They get panicky. I know, because I worked for one of them for many years, and we would never do anything automotive. We would definitely stay away from bars and restaurants. We will look at those unique property types. Self-storage is very big with us. Now, the things that we won't do gas stations, we won't do land construction, hotels, motels. I get them all the time, but we won't do it. We'll do this other stuff, and we do a little bit of funky properties that are unique. The other thing with us that's very important are primary and secondary markets. A lot of these guys will only look at big cities, big towns. They have a population restriction, 25,000 and up. We will look at anything as long as the area immediately around the subject property is developed. We won't do a mansion in the middle of a cornfield. Like, you got to be able to see your neighbors. If you can walk out of your house naked and nobody can see you, then we're not going to do that property. Right? You got to be able to see your neighbors, and they got to be able to see you. But we will go anywhere in Ontario. So we will do Timmins, Thunder Bay. It was either my first or second deal. It was a 5-unit mixed use in Thunder Bay at 70% loan to value. At that time, we were only doing 65, but we went up to 70, 271,000. That would have been a bankable deal on this side, but it was in Thunder Bay and it was too small. So we did it, and it was a great deal to get done. We're also, in addition to the investors, we do self-employed clients that are business for self. They operate their business out of their unit. We'll go up to 75% loan to value, 30-year AM, and our terms are 2, 3, and 5. Next slide is what we pay the broker. We will pay the broker 100 basis points on the 2, 3, and 5-year terms. We have a flat lender fee of 1.5. All this stuff, you can call me after or email me, and I can go through it and send you our actually our product sheet. But this is something that's unique to us as well. We pay the broker. The guys on this side that we sort of compete with the most, privates in the mix, they don't pay the broker. I don't know of any. Declan, correct me if I'm wrong, but I don't think they do. You got to pay them a fee on top of the interest rate, and what we do is we charge 1.5, and we give 100% or 1% to a broker, and that's quick and dirty on our product. So current market challenges. We were setting up in late 22 to launch for 23. We found that these were some of the needs that we needed to address. Some of the things that we found with our brokers that were front of mind, things that they were facing. Number one was lack of liquidity. Now this spilt over to res, and that's why we kicked in res fairly quickly. But with what's happened with prime rate going up and just the market in general, the tightening of the real estate market, a lot of these guys on this side, and even some of the banks, they've pulled back. They're saying we're not lending as much. We're kind of nervous. We don't know about putting our money out there. Some of these guys are actually running out of money. Or these guys that were maybe at 75% loan to value or 85 are now doing 50. We were hearing anecdotal stories all the time about some of the mix that they did higher ratio loans. As the rates went up and the values came down, now they found that their properties and their deals were like at 95% loan to value because the value came down and the mortgage was the same. So what they did was they were pulling back to 50. We don't have that issue. We have a lot of money. I always say I have a very rich uncle from the States, Uncle Sam. And because we've got a lot of cash behind us and we've got a lot of liquidity, you will never hear me say, like these guys might say, well, you know what, call me, or even the credit union say this. I've had a really rough month. I'm waiting for some pay downs. I don't have any money to give you right now. Try me in a month. We're good to go. We're always going to be there. We're always going to be available with cash on hand. Location and property restrictions. We found that a lot of these guys, the mix and the privates, they won't go to the smaller markets. They won't go to Timmins, Thunder Bay, North Bay. I did a tour in early October. I did 5 days of North Bay, Sudbury, and Timmins, and it was an eye opener. There's a lot of really good people out there and really a lot of good business. And they were saying no one's ever come to visit us. I was like the only BDM they've ever seen in the flesh. And they said, unless it's a Casse Pop up here, Casse Populaire, or one of the big banks, nobody lends up here. So they were really grateful to have Glass Lake visit them and say, look, we want your business. We found a lot of complex underwriting, a lot of brokers on both sides. Well, not so much here, but more complex underwriting in terms of having that package put together, making sure you've got all the documentation, all the paperwork to support your deal. Look, we're doing small balance commercial. It's not rocket science. We can submit it through Philogics. That's one thing about us that we really stress. You don't have to do all your underwriting and your assessment before. There's just some minor criteria that we need to tick off. What's the credit score? What's the property like? And that sort of thing. Em, I think we have a question. I think I see a hand up. Okay, maybe I'm wrong. So the underwriting was very complex. So we tried to simplify it. There was a lot of short-term options. With these guys here, everything was 12 months, 1 year, maybe 2 if you're lucky. And it was interest only. You started off with $1 million private mortgage on a storefront in January. In December, you still had $1 million. You were just out of pocket the fee, the 3 or 4% that you paid, plus all the interest. And now you had to either renew with another fee, or God forbid, that lender, one of these guys says, you know what, I'm out for a bid because I'm nervous. And now you have to find somebody else and go through the whole thing again, new reports, new everything. So we provide 2, 3, and 5 year terms. We provide term loan financing, principal and interest, 30-year amortization. That's where we're built like these guys. We offer term options somewhere where a borrower can come and park themselves for a few years for whatever reason. One of those reasons could be, I have money owing to CRA, and it's going to take me 3 years to pay them. Nobody's going to touch me for 3 years until I pay off CRA. I don't want to be going through this every year and renewing and renewing. Um, so I'd rather lock in for 3 years. Another case that I had was somebody bought an automotive repair shop years ago, and they've been in private hell. Like every year, they got to renew because none of these guys would touch him. He was out in the middle of um, a more not rural area, but more of on the outskirts, and we were able to give him into a 5-year term loan. And then there's the declining appetite for small commercial and the fear of commercial. So a lot of these guys were walking away from commercial, as well as these folks. They were walking away from it, saying, "Look, I'm out." You know, so there's less players in the market, and the fear of commercial, which we'll talk a bit more about now. People just afraid of doing these deals because they think it's a big deal. It's not, and that leads me to Declan. I want to introduce Declan Murphy with DLC Supreme, Dominion Lending Center Supreme out of Vaughan. I think it's Vaughan, isn't it? You technically Vaughan, right, Declan?
Yes.
And he's going to help us navigate the small commercial waters to maintain our maritime theme. Take it away, Declan. Tell us a bit about yourself, and we'll go from there.
Thanks a lot, Armando, for taking the time and letting me do this. I've been in the industry doing commercial for over 20 years. I've been working with A, B, and C lenders throughout that time. And just over the last 12 to 18 months, working with Glass Lake and just seeing your product has been to be blunt, it's been a breath of fresh air in the small commercial space.
Now I know we've done some deals with you. Tell me about a deal we funded recently, and why do you think we were a good fit for the client, and what made you choose us? Like I know we've known each other for years, and I know that you were one of our pilot brokers, but what was it about that deal and what we offer? What challenges did we meet?
So this particular deal, it was a two-story industrial condo in Caledon. It was owner occupied with a gentleman running a construction company. His business had multiple smaller businesses looped in, and what the real challenge was the income. The businesses he were running had various lengths of time in terms of their existence, and his financials in what he wanted to provide it were very limited. He actually told us at the onset that he didn't want to provide anything other than bank statements to verify his income because he did have multiple ventures going. So right off the bat, that limited us to the lenders we could choose. And while he was a high net worth individual, he did not want to provide us his income. So with 12 months bank statements, we were able to get the deal successfully funded with you guys at a 75% loan to value with very few questions asked and a very quick process.
Yeah, I've heard that a couple of times. I've had brokers actually tell me my client would rather pay a higher rate with a private or with somebody like you than have to provide all their personal information. That was a trade-off. And in the end, he made a point that I always say, it's a write-off anyway. So if they're paying 10 or 12%, not that I take it lightly. If they're paying more money, they're paying more money. But in the end, that's a write-off because it's it's a mortgage, it's a business expense, it's a business mortgage versus being, having to give them everything. Now, I mentioned rate. Now, what was the challenge with presenting our deal to your client? Because I know we've talked about this before, where number one is getting the deal done. How much can I get? And then usually cost is number three. But what were you faced with, and how was your approach in positioning it to them prior to get the sign back?
So yeah, DLC Supreme, like we approach rate differently. Like when we sit down with our clients, we have upfront conversations about the rate options that are available to them, and we don't focus on the rates. In the commercial world, it's about cash flow and it's about the conditions that are best for the client. It's about the features of the product. Can you prepay? And at the end of the day, it's about meeting what the client wants to get done. Can we achieve his objective rather than focus on the interest rates? Because some lenders will offer lower interest rates, but the offset to that would be maybe it's a 40 or 50% loan to value. That doesn't accomplish what the client's looking to achieve, so it's not really a viable solution for them. So it's about setting the right expectation in terms of the client's goals, what they want to achieve, and kind of the features and the conditions that are contained within the loan, which is how rate really never becomes an issue with us, because we tackle it on the onset and work them through it, sort of showing them that we're going to achieve what they need to achieve. Sometimes that involves putting a 1, 3, or 5-year plan together to get them from a glass lake to a bank, and with a solid exit strategy.
I like that, and I totally agree. I totally like we've had this conversation it was yesterday, where rate and fees are usually should be number three. And this is one of the things that I like about commercial versus residential. You know, with residential, especially on this side with all the A business, they'll move for a quarter, they'll move for 5 points, they'll move for 10 points. It's very transactional. Where with commercial, you've got to dig a bit deeper and understand it a bit more and sort of add the value. But even like in this space in general with res and with commercial, I find that, you know, exit strategy is very important. And this, you don't need an exit strategy. 5 years you renew or you pay out or you move, you know, you transfer to a lower rate. But identifying an exit strategy in the alternative space, there was always an exit strategy in the commercial space, whether it was you find that, like, I find that commercial in general is very much like alternative on the res side, because you've got a bit more of the story to put together, and it's not about rate, it's about getting the deal done, and it's about other factors. So now I went through some stuff earlier with some challenges, but based on your experience and knowledge, what would you say are some of the gaps the market is currently faced with, and is Glass Lake helping fill some of those gaps, if any? Like I talked about liquidity and all that stuff. Like, do you concur, or are there any other ones that you see that we haven't identified?
No, and I think Glass Lake's filled a real gap, because in my experience in the recent years, a lot of the lenders have stayed away from, or have shifted their business towards bigger loans, over $1 million, over $2 million. And that's hurting a lot of the small business people in Ontario, because they may not need $1 million, they may not need $2 million, but they still have viable businesses that need a service that is suitable for them. And where I think where your firm steps in, is that it's in those, with that small business owner, that restaurateur, that person on Main Street, Ontario, that's got a small commercial property. The big guys have said no, and previously, before you guys entered the market, their only real option was a private loan. Whereas Glass Lake has now offered these same clients an amortizing loan that allows them to build wealth, to build equity in their property, as opposed to being in short-term privates or private hopping year after year. And also, with the length of your term with some of those clients, it allows us to work with them to build a strategy to help them be their true partners and help them grow their business over the next 3 to 5 years, to work with them to maybe get them to a TD, if that is their goal. But again, it comes down to sort of what we discussed earlier, is that it's knowing your client and knowing what they want to achieve. Some clients may never be bankable, but it's good to know that they do have a solution that will allow them to build wealth and equity over time.
Yeah, and just to reiterate, I don't know if I mentioned the Thunder Bay deal, but our minimum, we will go as low as 200,000. 250 is our documentation, but we'll go as low as 200. And you know, our guidelines, our documentation says 2.5 million. We'll easily go to 5. And we're looking at doing larger loans in general. On exception, we can go up to 5 million fairly easily. So talking about the gap of the loan amount, right? We touched upon property location restrictions. 200,000 to 5 million. Now I know, like Equitable Bank, which is up here, and I love Equitable. I think it's a great outfit. Their minimum was 500,000. Now that's moved up to a million. They do 1 million to 8 million. Now there's a bit of an overlap. An equitable deal may not be a Glass Lake deal, but it could be. If it's in Welland, they might not go to Welland for 1.2. I don't know, but 800,000, 900,000, 700,000, 600,000. Nobody's really getting excited about that. It reminds me of the supermodels from the 90s. They'd say, I don't get out of bed for less than $10,000 a day. A lot of these lenders, they don't get out of bed for, anything more than 3 million. You bring them a $2.5 million deal, they'll say, I'm too big for that. I don't, that's too small for me. I would be all over that. You know what I mean? So the gap of the smaller deals, and when you look at the smaller markets, it's a perfect marriage because there's so much untapped potential. Whenever I do a presentation to a group of brokers, I'll say, how many here do res? Everybody puts up their hand. So let's say there's 10 in the audience. Everybody puts up their hand. How many do commercial? 1 or 2. I say, all 10 of you are competing for the same piece of business. These 2 guys are fighting out for the one piece of business. Who would you rather be with? Competing with somebody else or with 9 other people? You know what I mean? So it's such a niche market. And when you look at the smaller territories like Simcoe, Ontario, Gravenhurst, the northern region, connect with some realtors up there, connect with some brokers up there, like some broker partners that do res, which, at the end will allow, do your commercial at the end, but connect with some broker partners up there to get the deal done. It's a huge possibility, especially the way we get paid, the way we pay the broker, and the way the broker can charge over and above. You do an average deal is, let's say, $1 million commercial. Charge the client $15,000. We give $10,000 to the broker. You do one of those a month, 12 a year with Glass Lake. You do the math, right? On top of your res. I'm not saying give up your res and just go completely commercial. Some people like you have chosen that, but think about adding it to your repertoire. And we'll talk a bit more about that. Now, how did you find the overall experience? Now, we know about the product and how you position it, but the overall experience with dealing with us, and why would you choose us in the future? Like, what stood out to you the most about us? Besides, let's say, okay, we filled this niche and we were able to come to the table, with our bank statement program, less documentation, that sort of thing. What else? How would you find the overall experience in coming back to us?
No, the overall experience was great. Like, your underwriters are quick to respond to questions that we may have throughout the process. Additionally, they're not glued down to a manual, because in commercial, like I think everyone knows, there's always things that'll come up. You have to be adaptable and flexible to situations as they come up on the fly, especially as you approach closing. And I found both, like, working with your underwriters, your funding team, as things came up with the multiple deals we've done with you guys, like, there's always things that came up at the lawyers at closing, that you guys were able to pivot, make adjustments to the loan if necessary, sort of look at insurance requirements that were a challenge for our borrowers to make accommodations that both you and themselves were protected. So I think it's really, you guys from your underwriting and funding side are really flexible and adaptable to the needs of the client and the broker that's handling the deal.
That's really great to hear. I want to piggyback on that because I really want to stress. So I always see it this way: as a salesperson, as an originator, whatever you want to call me, our side, our job is to fill the pipeline. Their job is to empty it. So we help with your help to fill it, and then they help. And you mentioned working well with them. So I will take that back. I will make sure that Declan said some nice words about our underwriting team and our fulfillment team. But I also want to reach out to the brokers out there that are, like I said in the beginning, if you're residential and you want to start tapping into this and you're curious, I will help fill the pipeline. Reach out to me. Earlier, I mentioned these guys here, they want the package. They want the deal done, and then they want you to bring the deal to them. I will help you put that deal together. Even if it doesn't come to Glass Lake, I'll work with you. I just want to be known as the commercial guy. So I'll help you fill the pipeline. You'll help me fill the pipeline. And then, as Declan said, working with our underwriters, they will work with you in trying to get the deal done. For a well-versed residential broker, how would you recommend they build their small commercial client base? What advice would you have for brokers who haven't tried us out yet? So, what's your insight on that for somebody? How would you recommend they build their commercial?
I'd say for anyone that's getting into commercial, I would not advertise that you do commercial, because you're going to get any type of deal that's been floated around the industry that every lender has seen 3 or 4 times. If you're going to make the decision to go into commercial, I would work with something pick maybe one asset and focus on it, market maybe your own database rather than reaching out to the world. And I think an important thing would be to find a good mentor or a broker to work with.
I agree.
Because what can happen when people go into the commercial space is that you don't want to damage your existing relationships and your referral sources. So I think finding a good mentor or a partner to work with is also a great way to get that started.
I completely agree with that. I used to promote that as well when I was a broker. Partner up with me. You do the deal on your own, you get 100% of the deal, but is 100% of nothing better than 50% of something? We'd split the deal 50-50, at least you get something versus 100% of nothing. I totally support that. Now, there's also, I found, to the residential brokers out there, to get your feet wet or just to reach out to your existing sources, just ask them, do you have any commercial prospects? Do you have any, if it's a realtor, any commercial listings? Go through your own client base. Who did you do a business for self deal? Who did you place with one of these guys in the mix? Look at your mix and see if they're, what their exit strategy is. Maybe we could be their exit strategy. Maybe the MIC wants out and we could take over. But, look at somebody that you put into a house and find out if there's a commercial opportunity. It's always good to have that warm call with somebody that you know. Now, before we start getting to some questions, because I know there's some questions here, and we will answer them. And please ask some more in the chat and we will address them. Are there any last comments or anything else you want to add, Declan, before we start doing the questions?
One thing I'd like to add is that we've been kind of leading the way in commercial brokering for the last year to 18 months. And what we're doing now, what we're finding a lot of success with, is we're encouraging those residential brokers that have that commercial deal to reach out to myself or our broker owner, Vince Tarantino, to help you and co-broker those deals, because commercial is complex and it takes a lot of time. And you don't want to damage, like I've said, you don't want to damage your relationship with the client, with the referral source. And working with a firm like ours, we're true partners to you. We'll treat you well, we'll treat your client well. And at the end of the day, the client would always be yours. We're just looking there to support and help grow the commercial business across Ontario.
Yeah, that's great. And I totally encourage that. So if anybody's got a deal, let's say it's more of a non-Glass Lake deal, something that needs this full package put together. Let's say Declan's going to be going somewhere, not Glass Lake, because with Glass Lake, you can come straight to us. You can call me and I can walk you through it. I do this all the time. Brokers will call me and they'll say, I have a deal to run by you. And I've got my questions. And it comes down to 3 things. And again, I encourage all of you that are interested. You want to know more about commercial, I will spend 15 minutes, half an hour on a call like this, one-on-one, or I'll come and see you in person in front of your team. Get a triangle. It's 3 points. It's a 3-legged stool. You got real estate, borrower, and income. I ask questions about that. I go through, is it a purchase, refinance? What's the transaction? And then I say, tell me about the real estate. Location, type, age, that sort of thing. Then about the borrower. Is it a numbered company, an individual, partnership? But with Glass Lake, I say, what's the credit score? Because we're very credit driven. Credit score is very important to us. And then I ask about the income. Where's the money? Does it come from a rent or does it come from a business? And I always say on top of that, because sometimes it doesn't work the first 2 times. Is there any other income available, like a spouse, or do they have salary? And then from that, I'll say, you know what, Declan, send it in. Well, Declan knows. He knows better than me. He just send it in. But if somebody I'm having that conversation, I'll say, look, you know what? I like the location. I like the property. I like the borrower. The credit score is good. The income we'll figure out. We'll get the underwriter, so you don't have to do this big analysis. Let's see what we could figure out. Let's get it on the table, and let's get them, to do some operating on it. So anyhow, I've got some questions, Declan. So I encourage, if you've got a deal that's a bit of a handful, 50% of something's better than 100% of nothing. Call my friend Declan at the DLC Supreme, and he'll help you out. Now, I've got some questions here I'm going to go through from the top. And please, if you have any more, please add some. What income docs do you look for? For BFS, do you look for cash flow or income level, or both? So if we're looking at somebody that's owner occupying their space and they're running their business out of it, we just want 12 months bank statements. 6 months in most cases, but I always say, look, in case we need 12. And that's how we determine what the income is. Then they do self-declared profit and loss. So they basically said, I make $300,000 in deposits as a plumber, and here are my expenses, my taxes, my insurance, and my pipes. So it's basically bank statements. But be prepared to offer more to the underwriter if we can't make the deal work that simple way. We always try to be minimal doc first, simple first, and then what we try to do is, if we can't to work that way, then we'll ask more questions and get more documentation. So simple, fast first, but the bottom line is, the most important number one thing is, let's get the deal done. However we can get there, let's get there. Do you consider dry cleaning business? We will consider a property that operates as a dry cleaner as long as it's a drop-off depot. So they don't do any dry cleaning on site, because if they do dry cleaning on premises, dry cleaners are worse than gas stations. They're very, very environmentally, the contamination it's high. If we're looking at an existing drop-off, got to confirm and make sure that it wasn't an on-site at some point, because a lot of older buildings that are drop-offs now were on sites, and like I said, they're brutal. Can of worms. What is the rate like with Glass Lake for small commercial? Okay, so we've got a 2, 3, and 5 year term. Now, depending on the term, 5 years the lowest. If you go up to 3 year, you build in another quarter point. If you go 2 year, you build up another point. There's all kinds of these little risk premiums that you add on to the deal based on loan to value and credit score. The higher the credit score, if you're at like 740 plus, and the lower the loan to value, you're at, let's say, 60% loan to value, you're going to be 10%. As your credit score decreases, as your loan to value increases, you start getting towards the other end. So I always say we're between 10% and high 12s. You could hit even higher depending on the deal. It all depends on how strong the deal is. It's a matter of risk, and that's basically how we price it. But you got to remember one thing: that example of 12 months, 12 months, 12 months. If you take a 3 year term, and let's say you're at 12%, you pay 1.5% fee. That's like paying 50 basis points, 50, 50, 50 for 3 years, versus going private and then getting maybe 11%, but paying 3%, 3%, 3%. So you got to do the math, plus the reports and plus a bunch of other things. So I never look at it in terms of rate. I look at it in terms of, what does this deal cost? What does it cost on a per annum basis? I break it down on an annual basis. Declan brought up cash flow. Working on, what's your cash flow going to be like this scenario versus private, right? So that's something to consider. We don't do farms. We will go up to 40. We will go up to 40 acres as a site, and our appraisals on res, generally we do house plus 5. So it depends. It depends on the situation. Now, I guess this is more of a res question, because on commercial we wouldn't touch that. But if somebody's got, like, somebody came to me with a house on the residential side, and they were raising chickens and livestock for themselves, they weren't selling it, we're okay with that. But the minute they start using it to sell, then we have a problem. That's about it. Any other questions? Do we have anything else that 3.5, 6 unit plus, 6 unit plus. LTV. We do not accept, we don't do seconds. We only do first, and we do not allow seconds behind us. But I'd be curious to look at that deal. Send me an email, and I'd be curious to see what the conditions are. Right now, we don't do, but I'm curious. I'm always curious to see. And one of the things that I like about Glass Lake from day one, we've always been encouraged to sort of bring stuff that's a bit outside the envelope, just to test the waters, just to see. That's how we got from 60% to 75. To answer the question, Nigel, maximum loan to value is 75%. We slowly increased, and it didn't happen overnight. We went from 60 to 65. That Thunder Bay deal we did at 70, back then it was an exception, now it wouldn't be. And, you know, we've added a 2-year term. We were at 3 and 5 year only. Now we've added a 2-year because the brokers wanted it. So we listen to the brokers. We get feedback. If we get enough people saying we want X, and then we go back and make a case saying, look, I got 10 brokers last week that said they want X. And then Jake, my counterpart from out west, says he got 12 that said they want X. We got 22 people now that want whatever. And Glass Lake listens. So, you know, we're always trying to be nimble and trying to adjust to the needs of our brokers. So Emily just put my email up in the chat, but it's on the I think it's on the last slide of the webinar. I think she can probably share that as well, along with my number. So if your clients have I didn't see that one, Tamid. If the clients have substantial equity in other properties they own, would you consider increasing the LTV to more than 75? We would look at a blanket. We would consider that as a blanket. We would not, like, we would be limited on the subject property to 75% or subject properties. If there was more properties that we could add and, you know, increase the loan to value based on bringing those other properties, then yeah, we could do that. But we wouldn't say, you know, your client's worth $10 million and they've got all kinds of equity, we're going to give them 80%. It would have to be, you know, on that deal, we'd have to be, you know, within the 75. However we get there, is it by adding more, by doing, you know, doing something more creative. And again, this is one of the things I really like. Unlike, I can't stress enough with these guys, where you bring your package and say, I want X and this is Y, you got to justify it, which is a really pure way of doing business, right? It's a pure way of doing commercial lending. We will come back to you and say, listen, Nigel, you know what? It's not working this way. If you have any ideas, how about if we do this? How about if we do that? We'll give you some suggestions. We'll try to make it work. So if we have a situation where we need more money, we'll say, Nigel, Declan, is there any cash available? How about if we take this client off? The credit sucks on this client, but this one's great. So, you know, is there any way we can take this person off and go with this person? You know what I mean? Like, we'll try to make the underwriters will work with you. And I really, really like that, as opposed to saying, you know what, Declan, we can't do it. The client as presented. Well, that's fine, but that doesn't help your client. And it doesn't help our relationship. We want to try to make the relationship work by saying, look, you can always get a second opinion from Glass Lake. You can get some sort of suggestion on trying to make the deal sort of fly, right? Now, Tamid, I apologize for missing that. Any other questions? We're a minute away, Emily. Declan, we're almost there. Any other, did I miss anything, guys? I don't think so.
I do just want to share something to everyone. So if anyone wants to attend our Stampede event that we're hosting on July 5th, we're taking over Ranchman's. So the entire Glass Lake Funding team will be there to start off the Calgary Stampede festivities. So if you're interested in attending, just scan the QR code you see on the screen and register and secure your spot. And we hope to see you there. Declan, thank you so much for doing this webinar with us. We really appreciate it. And thank you all for attending. And stay tuned for more webinars from us. We do one every month. So make sure you check your email from us and register for our next one.
Declan, thank you so much. I appreciate it, buddy. Talk to you soon. Thanks, everybody, for attending. Thanks, Emily, for doing this.
Thank you.
Thank you. Have a great rest of your day, everyone. Thanks.
All right. Bye-bye.